You're listening to Guts and Grind with Siju and Sajan, making the real estate journey accessible to anyone.
Hi friends, welcome to another episode of Guts and Grind. You're watching episode 32, and today we're going to be talking about analyzing a property. Today's episode is a little bit different because it's just me. I kicked out Siju so that way I could share my way of how I do an analysis of a property. It's important to know what you're getting yourself into, and I think this is in addition to getting yourself comfortable getting into a property, right? And so you want to know the numbers and stuff, but I don't want to flood you with all these details because there's so many different calculators you can go online and just kind of look at, right? And type in all these numbers and do the research. But I think it's ideal to be able to just on a paper and pen, just kind of see what the numbers look like. And there is some research you have to do to get a general idea of what you need to make this happen. But generally speaking, you can just run some quick numbers, easy, simple math, and know if a deal is good or not, right? And so I borrowed my kid's easel with paper. I'm gonna write it all out. If you typically just listen to this episode or to our podcast, this one you might want to take some time out and just watch it, visually watch it on YouTube, because I'll be drawing some stuff that might be helpful to you, right? So again, running an analysis is not, it sounds complicated, but it really isn't. I think it's more about knowing your numbers and knowing what the markets you're in are about. And so basically what you want to do is figure out a market you want to play in, right? And I think we talked about in previous episodes, know what type of property you're going for, right? And so those are things that you kind of figure out. Once you've determined that, backdoor the way of how much you're willing to spend or how much you could afford, right? And so that's another element that you need to figure out. So let's just say you go for a properties that are like 200,000. So you're looking at neighborhoods that are in the 200,000 range, and then you determine that you could get rents for 1,800, right? Let's just make up these numbers. To get that information, you could talk to a realtor. That's probably an ideal way of going. If you want to do it yourself, I don't know about other markets, but in Houston and surrounding areas, we have a website called har.com, and it provides so much information. You could search for certain areas and see how much houses cost in a certain area. Also, you could do a search for rents and see how much rents are going for. And just a quick side note, it's better to base it off of the price per square foot versus just the price itself, because you might be looking at a 1,200 square foot house versus a 2,000 square foot house. And if those rents are the same, something's off, right? Maybe the 1,200 square foot house is super nice and the other is just a crummy, right? The bigger house is crummy. And so maybe that's why the numbers are different. But if you want to compare apples to apples, look at price per square foot, whether it's for purchasing or for rent. And so that kind of gives you a gauge. But let's run some numbers, right? So let's say you have a house and it's $200K to buy, right? So that means the down payment is 20%, which is 40K, right? So we're looking at 40K out of your pocket to get into the loan to purchase this house, right? And so let's also estimate 5K for repairs or updates, just to make it more presentable for your tenants, right? So let's say 5K, right? Let's look at this. 200 to purchase the house, 40,000 out of your pocket to buy the house, right? To get into the loan. So your mortgaged amount is going to be 160, right? 200 minus 40. That makes sense, right? 200,000 to buy it, 40,000 as your down payment. 20% of 200,000 is $40,000. You subtract that from the total, so that means your mortgaged amount is 160, right? I typically, just to make a quick down and dirty run of things, I do 1% of this mortgaged amount as my mortgage payment. And typically that's more than it really is, but when you consider the principal, the interest, the taxes, the insurance, maybe some repairs, allocate some money, just to have a quick down and dirty number, I just say 1%, just so I could quickly run analysis, right? So 1%, so we're looking at our mortgage payment to be $1,600 a month, right? And earlier I said $1,800 as rent, right? So if our rent is $1,800, our mortgage payment is $1,600, that means we have $200 of cash flow. That's the name of the game. I'm all about cash flow. We want to have cash flow coming in. Debt, the debt that we have, I know a lot of people don't like debt, and I'm with that too, but this is good debt, right? I don't like credit card debt, I don't like car loan debt, all that kind of stuff, it's just garbage. But this debt is earning you $200 a month, right? And so $200 a month, I mean, I think that's a good chunk. Yeah, this is a good chunk of change, right? But maybe that's not so much for you, right? But it doesn't end there because we want to figure out what's our cash on cash return. So going back to this whole thing, we did $40,000 for the down payment. We spent $5,000 for repairs. We're all in at $45,000, right? So we're $45,000 into this property. We know we're going to earn $200 a month. That $200 a month for a year, $2,400, right? So if we're making $2,400 a year, we divide that by this 45 that we put in because we took that out of our pocket to get this happening, right? The $2,400 you make a year divided by the $45,000 that you put in equates to a 5.3% return on your investment. And so now you have the ability to compare to if you were to play stocks or if you were to invest in a company or whatever. Like, are you going to get that same return? You're definitely not going to get that in the bank. So if you have $45,000 in your bank account right now, you're earning less than 1%, right? And so the real goal is to be able to compare those two. This is just one factor of it. This is talking about just cash flow. This is not talking about the equity that's being grown as time progresses or things like that. So this is purely just looking at the cash flow versus how much you put in. But this is generally, and I hope this is not confusing. If you have questions, please comment below. Let us know what you're thinking and how we could clear this up. But this is generally what goes on in my mind when I'm looking at a property. I already know the general area I want to be in. I already know the general number that I want to spend. And I generally know how much I can put down, right? So those are items that you need to know. You need to do your research regarding how much rent can you really pull from a certain neighborhood, right? What's the price per square foot versus the rent per square foot, right? Those are things that you have to do the research on. But once you attain those numbers, you're able to plug it in and generate this number. And then you tell yourself, is 5.3% worth it? Typically, I think 10% is really the minimum that you should really look for, because if I'm not mistaken, and I'm not really that well versed in stocks, I feel like it's easy to attain 10% if you play the stock market, right? Again, that's more of a cash flow thing. This also builds you equity as well. That's why I'm really into real estate. I like real estate because there's different facets of how you could grow your wealth. But yeah, that's kind of where we're at. If this was confusing, comment below and ask your question. Be very specific, and I'll try to do my best in answering it. Thank you for watching. Thanks for making it all the way to the end. If you haven't already, please subscribe, like the video, share with your friends. More than any of that, please comment below. Let us know your thoughts. Let us know what you're thinking. If you have any questions about this, or if you have things that you want to know about for the future, let us know. We'll make a show about it. Thanks a lot, guys.
Thanks for listening to Guts and Grind with Siju and Sajan. Be sure to tune in next time.